Well, hello everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights, where we're going to take a look at what's going on in the markets and some things that you ought to be mindful of. Good to have you back. Hope you had a fantastic Thanksgiving. Hope there was much for you to be thankful for. Want you to know that everything that we do here is for educational purposes only, not intended as investment advice. And so what's moving the markets? Well, the NASDAQ jumps to a record high. Dun, 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 dun. It's kind of a big deal. November was the best month of the year for both the Dow and the S&P. I think the Dow was up about 7%, S&P 5.5%. And the Russell 2000, that's an index consisting of 2,000 small cap stocks, got a real boost from the election, was up 10% for the month. 10-year Treasury, pretty stable at about a 4.25. Oil prices aren't doing a whole bunch, just a bit below $70 per barrel. A lot of news this week. So today we get the manufacturing PMI number coming out. So that'll be interesting. See if manufacturing's starting to pick up in this country. It's been in contraction now for years. Little Fed speak. Tomorrow we get the JOLTS number. That's the job opening. Looks like we're forecasted 7.6 job openings, 7.6 million. So anybody who wants work can clearly get it. Not suggesting it would be your dream job, but Wednesday, very important, the ADP employment number. How many new jobs have we created? Supposed to come in at 158,000. Last month, it was 233,000, which was a huge beat. We'll see if that continues. We get our ISM and PMI services number, along with, you got a speech by Jerome Powell. That's always a potential market mover. And the Fed Beige Book, where the Fed talks about their state of the economy. On Thursday, we get initial jobless claims coming out, expected to come in at 215,000. And on Friday, all kinds of data. Unemployment number, forecasted at 4.1%. Hourly wages, forecasted to move up 0.3%. And we get our consumer sentiment number. So lots of data this week that is potentially market moving. So we'll be keeping an eye on all of that. You should as well. Last week's heat map, big winners, Lilly, Meta, Amazon, Apple, not so much NVIDIA, and the oil patch didn't do real well. 1 year heat map, NVIDIA up almost 200%. And you can see, with the exception of Intel, Adobe, Nike, Boeing, Dollar General, mostly it's been a sea of green for the last year. Market breadth, we like to look at how many stocks are hitting new 52-week highs versus lows. On the New York Stock Exchange, 582 compared to 68. Very strong. And on the NASDAQ, 753 compared to 206. It's fantastic. Percentage of stocks trading above their 50-day moving average is now almost 70%. Very impressive. Markets are top heavy. The largest 10 companies in the S&P, well, even though they're only 10 out of 500, they are 35% of the way to the overall index. Not necessarily a good thing or a bad thing, just depends on how they perform. And the winners are, it looked like we did some bottom fishing last week. Big winners, Ulta, Western Digital, Ralph Lauren, Enphase, Dollar Tree. A lot of these had been down. For Solar, Dexcom, Energy, Lilly, and Ross Stores. The grass is greener right here in the good US of A, 75-year highs on US stocks versus the rest of the world. And yet people ask me all the time, are you investing in other countries? Why would I do that? We have more stocks to pick from here than anywhere in the world, greater liquidity, lower fees. If you can't find it traded on the US market, you don't need it. Russell's biggest, this is the S&P 500 futures. Forget about that title. That's wrong. But it is showing that in the futures market, big bets are being made on this market going higher. Fund managers are basically out of cash. They are 98% in equities right now. Leveraged ETFs are surging. Be careful, especially these single stock, like you can get a leveraged version of NVIDIA, for example, that may move up 2 to 3 times as fast as the stock itself. Just know that cuts both ways. And on the way down, it is really painful. On the way up, it's euphoric. December is generally a safe month. This shows how often each month is the worst month of the year, going back to 1928, once in December. So feel pretty good about that. Fear and greed index in the greed category. Greed causes buying. Buying causes prices to move higher. How much will the Fed cut rates? This probability has been going up. Not long ago, like maybe a month ago, it was about a 50-50 chance. Now there's a 65% probability that the Fed will cut December 18th. 1-year sector returns. So the last 12 months, the S&P is up 31.47%. I wonder what percentage of you are up 31% for the last year. That's just an average rate of return. If you haven't done that, there's a problem someplace. The biggest winners: communication up 42%, financials 41%, tech 40%, followed by discretionary at 33%, industrials at 31%. So those have all meet or beat the averages. Utilities not far behind, but the rest of them, it's a big fall off. I mean, you're down by 10 points on staples, real estate, materials, healthcare, and energy. All right, let's take a look at the charts, see what they reveal. All right. Let's look at the SPX. This is a 6-month chart. That yellow line is a 50-day moving average. So the first thing I check, what is that 50-day moving average doing? It is sloping up. That's bullish. Are we above or below that 50-day? We're above, also bullish. This is a bullish market. Plus, you throw in the market breadth. I mean, it's indisputable. Now, how long will it stay bullish? Until it doesn't. That's the answer. And nobody knows when that's going to occur. I would suspect it'll stay bullish as long as we continue to trend above that 50-day. What about on the Qs? So we are getting right up against that all-time high. We got to see if we can break through that. So that's kind of a key level. And we were talking about the Russell 2000. See what that chart looks like. And it looks like we've kind of rounded off here, right? We made new highs, and since then we've just moved sideways. So we'll see if we gain any momentum into that next week. So my trade partner and I do trade ideas of the week for our inner circle group. This is what that has looked like this year. On 103 closed trades, average return has been almost 18%. in 16.6 days, 93.3% have been winners. So if you're wondering, are there strategies that can produce consistent profits? That's not to say a profit on every trade, but you don't need to make a profit on every trade. Just the vast majority of them. You want your upside to be greater than your downside. You put that together and you end up with a track record that looks like this. All right, fantastic. Well, thanks for hanging with me one more time. I will see you next week. Hope you're starting to get into the festivities of the holidays. Enjoy every moment of it because it is precious. All right, till next time, be safe, be blessed. Bye for now.